future finance will mean that everyone ultimately has a more direct access to what they own. It boils down to really leverage that core of the blockchain, that we can transfer originals and not copies between me and you from anywhere on this planet with just access to the internet. I'm Mathias. I'm one of the co-founders and group CEO of Sygnum. Sygnum is a global digital asset banking group which has set out with its mission to empower everyone to own digital assets with complete trust. We're operating as a bank out of Switzerland, but also fully regulated across Luxembourg, Abu Dhabi, Singapore, and adding 2 more offices this year. We are excited about helping the ecosystem to create bridges between traditional finance and future finance, as we call it, by offering services to crypto companies, DLT companies, founders, but also banks to bring more and more assets on-chain and to integrate seamlessly crypto, stablecoins, and asset tokens with the traditional fiat world. If we truly want to make this big and build future finance and leverage this technology more broadly for ultimately billions of people, we need to build trust. And you have to build trust also by accepting that 99.9% of the financial assets were and still are, to a large extent till today, in traditional finance, and they're regulated there. And so if we want to start moving these assets on-chain and to believe in this technology, create new use cases and create real institutional and also more broader adoption, we need to build trust. And we need to do this by setting up an institution which is from day one fully regulated. So as a result, we said we will not do a single transaction, not earn a single franc in revenues before we're a fully licensed bank in Switzerland and also licensed in regulated in Singapore. The evolution in the US with the Bitcoin ETF approval and recently also the approval of the Ether ETF. These were major transformations because it just sent that signal to the market. Now, okay, it's going to be accessible to many more people in traditional ways. And also it started to send the signal that the US is at least starting to change its stance from a regulatory perspective. So that led to quite some market movements and positive sentiment. Secondly, it's more broadly also the regulatory landscape. The reality is, it's just we feel there's now real developments. We have recently seen the MiCAR about to go live. Circle had great news with the MiCAR compliant stable coins. Switzerland has been doing this since 2019, so we've had that regulatory certainty for a while. The UAE is working hard on further building out frameworks. Singapore as well, and Hong Kong. So we are now starting to see a global kind of more and more cohesion that allows to truly scale this and to again embed digital asset finance with traditional finance. Thirdly, I would say it is a bit more Switzerland specific, but given we were a bit maybe trailblazers and ahead of its time also from a regulatory standpoint, I think I should mention it. We have more than 20 banks that have integrated and are integrating with us. So right now, more than a third of the Swiss population is trading crypto ultimately via Sygnum. They don't know it because we are just in the background, with more than 20 banks, including state-owned banks. But this is obviously also bringing adoption. I think it's significant. It's significant for Sygnum's clients because we are supporting the ecosystem by providing banking services, treasury services to crypto companies, to founders, etc. And if they do well and if they can scale, we also do better. And it's beautiful to see the success stories of our clients. And particularly in this year, we see so many of them. So it's a very exciting time. We had this hope of programmability, right? We can make financial assets, financial instruments, we can program them with code and make them do what we want in a more efficient way, and ultimately, as a result, create better products for our clients. And now, given also the macro change, the interest rate environment that has changed over the last few years, and also just the ecosystem evolving, now I think the real game is starting. I mean, this year, one of the key trends was really also the real world asset tokenization that is taking off. We have this year tokenized a money market fund from Fidelity. Together with Fidelity, we have various foundations that put their money where their mouth is in the treasury, that invest their treasury into these assets because they have it and they see it on chain in spirit of transparency. We're working with Chainlink on bringing also the NAV on chain, which is another important missing piece to make it scalable. So all in all, I would say it's been a long journey, many learnings. It requires many components to coexist and work together. And I think now we're approaching an inflection point, which I'm very excited about. The level of strategic relevance the discussions take in these institutions have changed. So a few years ago, it was a quick discussion to then conclude we don't want to have anything to do with this technology, or particularly let alone crypto. Now, people are much more open and thoroughly thinking through whether they want to get engaged in this industry, and if so, how. So that means there's strategic debate and rational and reasoning. Sometimes some institutions still come to the conclusion at this stage it's not for us, but it's thought through, which is already a big step because people are then educated. And it also then leads to sometimes people leaving these organizations or others joining because they're looking for exactly that. So that is one. Second, I would say there's an evolution in terms of what they feel should be done first. So there's always this debate, should we do crypto first or should we just focus on tokenization of assets? I've seen many companies and also banks first always saying, let's work with tokenized assets because it's safe. Thirdly is the debate, private versus permissionless blockchains, which a few years ago always ended up being, well, we can just work with private permission networks where we control everything. And now I think public blockchains are really winning. People more and more realize, hey, this is just makes sense. It's more secure. It's ultimately the only way to scale, and that is a big win, I would say, for also how these institutions are thinking about it and how regulators are creating the frameworks that allow to operate with these blockchains. And then, last but not least, when it comes to tokenization, we now see real assets moving on chain with the biggest institutions, BlackRock, Fidelity, private markets. We worked with Hamilton Lane, one of the largest private market sector players. They are now creating products, new asset classes, share classes to have on-chain access to their products. They quite frankly also see it as a business model and business case because they see more and more assets on-chain and more clients asking for on-chain representation because it's in the spirit and following the mantra of transparency. And so these are kind of the trends that I'm seeing. For me, at the very core, I hope that future finance will mean that everyone ultimately has a more direct access to what they own, and that it's more efficient to transfer value, anything of value. So it boils down to really leverage that core of the blockchain, that we can transfer originals and not copies between me and you from anywhere on this planet with just access to the internet without intermediaries in between. Now, future finance for me doesn't mean that we all will run around with self-custodized assets and we don't need institutions such as Signum anymore. I don't believe that this is what people want, and not because they cannot necessarily, just because they don't. Not everyone is interested in managing their assets, in managing and securing their assets. But future finance means that ultimately asset base and ownership, to me at least, is secured on a public permission ledger and not in a server room somewhere by one institution, so that the ultimate ledger and the transparency is given by a ledger that is open and transparent, and then maybe on top of that, it is new use cases that also blend in with other trends that we see, be it AI, cloud-based computing. There's business models we don't even know yet about, which I believe crypto and the DLT and permissionless blockchains will be perfectly suited to manage and to open up a new world of future finance that we may all not even imagine yet.